is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom. Good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock. You and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off in markets in positive territory. S&P is up by 9 points right now, trading up 0.1%, trading at 59.90 as this market continues to bump up against that 6,000 price point, making a run for it yet again. And we got okay volume. We'll see. The final hour, we'll see what we have in. We got yields in focus, dollar in focus, but we're not quite there yet. 850,000 contracts trading on the S&P. And you're doing 1.1, 1.15. Some of the bigger days out there are 1.5. So we got some more volume. Not quite making it. NASDAQ 100. Pretty similar action, right? Making a run. NASDAQ 100 approaching the highs we had May 29th. You're actually above where we were May 19th. We're inching towards all-time highs right now. Volume-wise, though, we're up here on whispers, man. 342,000 contracts right now. Yesterday you did 419, and even that's a low volume day. Dow slightly in the red, Russell slightly in the red. Let's jump to the focus of the day. Yields, dollar, Fed, jobs. So check it out. Almost a whole point in terms of, you were at 110.12 this morning. You make it to 111.07. We're at 111.03 right now. We got the 10-year at 4.36. And to show you what that looks like, I mean, we're down almost 10 basis points. And when you put that in terms of the slide we've had in yields, yeah, you're talking about quite a move from this morning. 4.46 down to 4.35 in a heartbeat on 1 week number. Friday's jobs number becomes ever so important now, because if you get some follow through, man, watch out in terms of this market and what is getting priced in. Nope, I just had one article up here. I lost it. We were talking about yields. Let me see if I can get it back. That one. There we go. Excuse me. So this article I talked about at the top, and the Fed is pricing in. Here we go. Forgive me. Treasury is extended, okay, that the Fed will cut interest rates at least twice this year to prevent the recession. Now, when you go over to the CME Fed Watch tool, which again, I always say, is not like some solved theoretical, but what I love looking at is the differences you have and where they fall. So right now, okay, we're at 4.25% to 4.5%. The odds that we get even something like 3 cuts by the end of the year are now at 32%, up from 19%. So you're getting even the odds of 4 cuts are 8% versus 3. Now this could be wildly wrong, but this is what's getting priced in, and I bring it up because we're now bumping up against this area that we have 4.35. You're getting higher price, the lower yield number, and you start getting past these, and you're on your way to make a run for almost 4% again. And boy, if we ever get that, you talk about housing stocks, yeah. You talk about, a second leg up potentially on cheap capital, right? How about Lennar? Up 3.2%. You want to talk about stocks that might benefit? KB Homes up 2.5%. DR Horton, DHI up 4.6%. You know what the kicker is, folks? I hadn't even pulled up those three stocks today yet. Usually I'll go through everything, you're talking about it, but it's not surprising when you make that type of it because you start getting this types of moves, okay? And look at this. All right, check out the builders, man. This would be wild if this is the turn, right? If this is the turn, watch out Friday. Watch out on yields and yield sensitive. You get the NASDAQ 100 up a little bit more. S&P's up 1/10. NASDAQ 100 up about 4/10. And we get the home builders. Yeah, trading up 2, 3, 4%. We jump around to some equities. Amazon up 1% right now. Trading up $2 to $207. Microsoft up 0.2%. Netflix does not stop. Look at this. All-time highs for Netflix. Up $22 today alone. I mean, what I was looking at is you're up $22 today alone, and in 2013, that entire company was worth $22, and that's what you gained today. It's been quite a 12 years for that company, rightfully so, but man, it is remarkable. Ads. You always wonder if Reed Hastings, part of me thinks, everybody's always talking their own book, right? They're always talking their own bias. I'm fairly certain that in the back of his head, he had probably solved that eventually the business model is going to go to advertising, even though he was a diehard, never going to happen. And, maybe he was holding out hope that they could always succeed, but he knew in the back of their head if they ever ran into any problem for subscriber growth, you turn that advertising key and it revs it a second time. Because, boy, that has really paid off. Brilliant. And you're talking about now, man. What is Netflix approaching here? $528 billion company. My goodness, right? Comcast, $129 billion company. These companies, Netflix just blows it away. We jump around to Warner Brothers Discovery. All right, let's see what's leading this market. NVIDIA, AMD, strong like bull, man. Coming up to this recent high, 119. You got a high out here with huge volume, May 14th. That high is 119.83. So realistically, that's going to be a little bit of a battle. You're going to want to see some volume on AMD. You're up from 76 to 120, and you're running into this bar from May 14th. All right, we'll talk a little bit of Dollar Tree when we come back. And look at this volume, right? Talk about a head fake. They trade higher on the Dollar General news from yesterday. Dollar General faring pretty well. They come into their earnings at 96. You're still trading at 111. Dollar Tree, different story. And they're unloading Family Dollar, and probably a good thing they are, as they saw that they were facing some headwinds. Dollar Tree down 8.1% on their numbers. They're going to have some huge volume. We'll talk a little bit of dollar stores when we get back. We'll talk some retail. Stay tuned, folks. Come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P's in the green. NASDAQ 100 up by 77, and Dollar Tree, as I mentioned, down about 8%. So we jump over to Dollar Tree. Let me get back to it. And this is the kicker that I was talking about. So Dollar General comes out with their numbers yesterday. They generate 80% of their sales from food and consumable goods. Let me even zoom this in bigger, okay? Because, boy, you talk about, I'm never going to forget this, okay? Write it down. If you're trading these equities, you're watching it. I don't think a lot of people would know this. A lot of smart investors are going to know it right now because of this divergence you're getting from yesterday and today, where at Dollar General, 80% of their stuff is food and consumables, less reliant on imports, okay? Dollar General, less reliant on imports. Dollar Tree, they get half of their revenue from those categories, meaning they are more reliant on imports. There you go. Dollar General, Dollar Tree. You want tariff risk off? Dollar General's the way to go, and the markets are reflecting it. And Family Dollar, yeah. So Dollar Tree is selling the Family Dollar division for about $1 billion. That's on track to close this quarter, and that's going to allow them to focus on its stronger Dollar Tree chain. Well, you see the problems the stronger chain's going through. Probably a good idea. They ditched Family Dollar. That's weighing on the earnings, though, as that transaction is going through. Sales not done yet. They're still financing and servicing of that Family Dollar. Nonetheless, the tariff story, remarkable. Dollar Tree, $4.6 billion. Same-store sales growth, 5.4%. Both ahead, but guess what? They got a problem, man, because they're bringing in 50% of what they're dealing with of imports, and it's not like they're dealing with huge margins, right? You're at the dollar store to a certain degree. I know they can price it up occasionally over $1, but you're at the dollar store, and they're dealing with tariffs, and some of those tariffs they were talking about here at the top of this, I didn't even mention it. This is how far past we are. 145%. Yeah. The retailer said the timing of expenses will weigh on adjusted earnings, including paying 145% levies on some products from China. Well, that's a difficult way to pull money to the bottom line when you're doing that at a dollar store. From Bloomberg, we got beige book activity this afternoon. Out at 2 o'clock, Federal Reserve. All districts reported elevated levels of economic and policy uncertainty, led to hesitancy and cautious approach to business and household decisions. I mean, this comes on the heels of the ADP with 37,000. Prices increased at a moderate pace. Widespread reports of contacts expecting cost and prices to rise at a faster rate going forward, right? Yeah. Those increases to be strong, significant, substantial. So you have uncertainty, You have the potential for inflation. The mention of tariffs came up 122 times in the Beige Book, compared with 107 in the prior. Uncertain appeared 80 times. Soft data, but nonetheless, it's out there. All right, yeah, we talked a little bit of Wells Fargo. Talked about this in the program this morning. Well, the reins are off. Wells Fargo, they can grow their assets. And guess what? I also talked about, I'll bring it up, Wells Fargo up by 1/3% right now. Put it back. So they give up all that. Yeah. Wells Fargo's in great shape. This asset cap was going away. The market knew that. What's more interesting is thinking about the potential for whose business are they coming for, right? And there was a great article this morning talking about some of the regional banks that have really exploded in value. Excuse me. What is it? KBW, right? Yeah, there it is. I mean, you look at some of these. Yeah. But Wells Fargo has been contained, and I'll pull up that article. You know what? I'll find it. This is a great article just talking about the rapid growth in deposits across the board. Wells Fargo has been remarkably restrained because of that asset cap. And guess what? They're coming for some of that market share. Look at Amazon. Up by 1% for Amazon. We check out the volume. Let's check it out on a daily. Yeah, some of these volume numbers right now. I mean, look at Amazon. Amazon's at 21 million. You're up by a full percentage point. And meanwhile, you did 33 million yesterday. Excuse me. We'll get some volume, but I mean, what do we need? We're at Amazon. We're at 20 million right now. And I got 29 million. 29 million. Now, you're going to have some big volume come in on the close, but you still need a monumental amount of volume not to put up one of the lowest volume days we've had in recent memory for Amazon shares. All right, we jump over to gold. Gold's up $20. We got dollar weakness right now. Let's jump back to dollar quickly as we're checking in. Okay, not breaking new lows just yet, but 98.80 in that dollar as we creep lower. And how about Vista Gold today? All right, so Vista. You got some selling going on in Vista today, man. And, you know, folks, I talked about it in this program this morning. No matter what's going on in Vista, we get selling, okay? Price and volume, there you go. Now, look at these Fibonacci numbers. You talk about to a T. Talk about to a T, man. 1 to the 1.618, boom. Got you there almost to the penny on this chart. And that starts in February last year. Vista Gold trading at about 32 pennies. You trade up to a high of 83. You back it down, and then you accelerate. And your 1-to-1 was at about $1. That's right where we are right now. But check out, folks, it's Wednesday. That's the weekly volume in Vista. Now, watch this. You pull up the 5-minute bar on Vista, okay? In the first 20 minutes of trading, Vista Gold was trading 432,000 shares, 404, 360, and 464. Okay, so you're trading about 400,000 shares every 5 minutes. Then you drop down to 240 and 266 as you chopped around. You got buyers in there at that price as well, okay? You do. And then things level out. And now we're doing sometimes 4,000 shares every 5 minutes, right? Nothing. This is what normally happens, and that's the point. This is a massive sell. You take a look at the daily. I just told you that we did 400,000 shares every 5 minutes. Folks, there's only so many days when you did over 400,000 shares. Many days, 200,000, 225. Even on big, strong days to the upside, you were only doing 1 million shares. We did 400,000 shares every 5 minutes for the first 20 to 30 minutes of the day. Remarkable selling. We're right back to the 1-to-1. We had a huge expansion higher. And, you know, there was something in there about Vista having the possibility of shares, I think. I'm going to dig into it, but, you know, maybe this is Vista. Do they just pull 3 million out? I'll have to look into Fred Ernest and see if we can get back. And I'm sure they'll have some news on this, but I haven't found it yet. If anybody in the den has it, let me know. No matter what it is, though, folks, that's what's so great about price and volume. Check out that selling, okay? And there's a fundamental reason that we have some selling going on. But, yeah, I don't have any news. And I'll look again for that one because if you have the ability, and that's what sometimes the companies will do, they'll set up structures that they can issue shares, right, at any point into the future. And I'm wondering if that's what's going on to some capacity, because the people running these companies, right, you get a run up like this, we've seen it happen with the likes of Robinhood, right? We see it happen with the meme stocks, and this is not a meme stock, all right? But you get a run like this, even as traders, remember that the people running those companies might say, hey, this is a great time to issue some shares to shore up our balance sheet, and that dilutes the company. It shores up the balance sheet, and longer term, it might be the best for the company, but maybe, sometimes on a move like this, that's something that you have going on. We'll take a look at it. Nonetheless, Vista down 15%. Stay tuned, folks. Coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's up by 9. So taking a look at that Vista deal, right? And I'm not sure if this is a driver, but this is the only thing out there. And it is something that was mentioned earlier today by some tigers in the den. And it's not news of today. Okay, this news I'm giving you is dated May 27th. I have no idea. And you always got to be careful, folks. And that's why I say do not take this. I have no idea why this equity is trading lower, except for the fact that we have selling going on today. Okay. And you start getting into this internet of, anybody can create a website, folks, with a press release. And I'm not even talking about Vista Gold. I'm talking about any single person. You create a press release, you go to a press release company, they push it out to the public, etc., and data's out there. You can't take it. But what this says, okay, Sun Valley Gold LLC announced that about 3.4 million common shares of Vista Gold. Now, keep in mind, the reason why this is substantial especially is because Vista only has about 123 million, okay, total shares outstanding, 124.8 million. Call it 125 million shares that is outstanding. And so you get an announcement here that Sun Valley exercised control and direction over an aggregate of about 20 million common shares for and on behalf of a client account, but 3.5 million shares held in a client account, which they were discretionary trading authority for, have been distributed to that client account. Well, what's remarkable is so you have 3.5 million shares, which represents almost a 3% holding in that company, going from an account that's being managed for discretionary authority right back to the client. Maybe the client needed that money to take out. It's possible. Now, I don't know why you would ever go into the market like that in a smart money scenario, sell it down to 15%. That's what does not make sense. So we'll see how it plays out. But nonetheless, always look, because there's something going on there. You never know more than the market, and the market knows something, and then there's either a huge seller, and if there's a huge seller, what do they know, right? Why is somebody dumping the market to that degree? Because, yeah, it would take you some time to sell out of that, but I'm not sure you want to drive the equity down 20 pennies, and you would never want to do it in the first 20 minutes of trading. Doesn't mean it didn't happen, but there was a massive sell order, and it's a little light on news. You're sitting right near the lows there, 98 cents, and you're right at the 1-to-1. Gold up $20. There's something going on there. I mean, you jump around some of the other gold equities. Harmony up by about 60 pennies right now. Some of the other strongest ones out there. How about New Gold? Check out these equities, right? Look at New Gold on a weekly. Bumping up against the upper boundary line. On a daily, you're almost breaking above it. You're negative by 0.2% today. Two of the strongest ones out there, man. Kinross Gold. You're pushing the highs that we had at 1596, and Sandstorm is a remarkable one, man. Yeah, we just made the highs today, and that might be an all-time unless you get some wild one back here. You do. You got a wild one back in 2012. Nah, we're pushing these highs. Yeah, even Sandstorm. That's right, that blue line. You're coming right up to where you were in 2020. Some of these equities. I was talking to Tim Ord yesterday, and he was kind of saying, listen, shorter term, we got a little bit of digestion. And you don't have to be a master technician, folks, to see the run that we've had in many of these equities and say, you know what? A little bit of consolidation might be healthy when you're coming off the type of moves we have. We jump back to silver. The only thing about silver is check out the volume, right? I mean, you're talking about since April last year, it's less. Now, you see a break, you want to see silver break these huge volume days. The week of March 31st, when you really had silver drive lower, that's what you got to break above there. And you got to do with some volume. Now look at this though. Just through Wednesday, we're going to get some volume, man. We've already done 208,000 contracts in silver, and we got Thursday and Friday still to go. You're running into 470 and 460, but if you do it on some decent volume, man, jump around to copper. And a weak dollar is going to help that. Weak yields. Yeah, look at copper. Same way. Now, copper, you're going to be bumping up against this area about 520. You're at 490 right now for copper. But, boy, when I wake up in the morning, folks, I'll check out the markets. I'll check out usually yields, and then I check out the dollar. And that's the deal right now. What's the market doing? Where are we with yields? What's that doing to the dollar? And we're going to get Friday payrolls coming up. Jump over to Tesla shares. I was reading an interesting article from Bloomberg. Came out this morning. Tesla down by 2.8% right now. Don't think it has to do anything with this, but Bloomberg's got a big take on it. And, you know, what's more remarkable of this is that we're coming into this remarkable time of self-driving vehicles. And it's going to be this necessary shift of trusting the vehicles you get into. I was talking about this earlier. You know, you see these people that have a phobia of flying. Most of the time that has to do with a lack of control, understandably, right? We jump into the car, you're in control for whatever it is, right? Control. Everyone wants control. You got no control in self-driving cars, at least at this stage in the game. Even if you believe that we can solve this and somehow have all self-driving cars, the computer knows never to bump into each other. But unfortunately, the roads are dangerous, and there's going to be many cars. And so the Journal's got a big one. I'll post this in the Tiger's Den, just because this is a scenario, folks, that plays out every time. This is reportedly and so this is talking about robo-taxis coming in Austin. Federal regulators are investigating whether the system is dangerous, even with a human behind the wheel. And then they have what seems to be, I think it was the first instance of a self-driving, and they bring it up here. And this is, listen, it's a sunset. There's weird lighting. You have a traffic. You have people on the highway doing 65 miles an hour, and then boom, all of a sudden, you can't see anything, and traffic stopped in front of you on a highway. I mean, that could have happened to anybody, the best driver out there, okay? But it's going to happen. And so what's going to happen is you're going to have, and look at this, man, 40,900 traffic fatalities. Oh, my goodness, in a year. And I'm trying to get to the last because this was the first reported. That's what they actually said in here. And they got a bunch of visuals. If you can see this on a desktop. I was trying to get the exact verbiage. Yeah. So how does that play out? And I'm interested to see how Elon navigates that one, because you're going to have to trust these vehicles. And, you know, you want to have regulation that's lower, but man, you're going to have trust. And that's where this overpromise, underdeliver type, you know, and promising, Elon's been promising self-driving for a while. Myself right now, okay, I love technology. Especially with a child, I won't be jumping in a Tesla anytime soon, right? Because I'm not quite sure that everything's, you know, there's going to be some issues that take place, and it's going to be a tough one to see how you get over. But it's coming right now. That's what I mean. We got self-driving Teslas in Austin. They're coming this week, let alone Waymo, right? All of that stuff. It is coming. All right, folks, markets in the green. NASDAQ 100 up by 0.3%. We'll come back. We'll take a look at some tech stocks. We'll talk some other equities on the move. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps just chopping around just like yesterday afternoon. Very little volatility right now. You jump back to the S&Ps, we're chopping around a period of about 5-10 points, right? You look at this whole entire day right now, you're talking about a 20-point range, but coming in a little bit lower prices. S&P is positive by 4 right now. All right, we'll check out some of the equities that are moving today. CrowdStrike. Their numbers down by 5.4%. You were down to 445, up to 470. Talk about some volatility, right? 462 right now, down by $26 for CrowdStrike. They expect current quarter revenue just under what the market was looking for, basically. And so the market, lofty expectations right now. Yeah, Constellation, man. Oof. Careful what you chase, right? Man, for anybody trying to get in on the action around the acceleration yesterday on the deal that Meta had, not so much. Down by 4.4%. They get a downgrade following that. You jump over to Meta shares, up by 2.8%. So we talk a little Meta. They're going to Hollywood. How about it? And yeah. Meta seeks Hollywood deals for new virtual reality headset. How about Disney? A24 about exclusive content for a premium VR device. Exclusive content. And if you haven't tried the Meta Ray-Ban AI glasses, they have them at Target. Check them out. So Meta's gonna charge less than $1,000 for the device, more than the $1,000 that they're talking about for the Quest, but less than the $3,500 when they're talking about the Apple Vision Pro, of course, right? They're going to find a sweet spot. I mean, we're paying $1,200 for an iPhone. If you really got this amazing VR headset, you need a phone to live, though, versus recreation, right? And yeah, they've done well with those AR glasses for sure. But just the idea that they're going to secure exclusive content, because content's coming. I'll tell you, folks, I have a Meta Quest. I have, what's the one I have? Yeah, is that what they're... Yeah, a Meta Quest. And I have like the 2, I think. It's one prior to the one that they're selling right now. I've had it for 2 or 3 years. And it's amazing. First time I could put it on, I couldn't believe it. What I found so remarkable is I went onto YouTube, and they had all these 4K 360-degree virtual reality videos that you could step into in YouTube VR 360-degree videos. And to show you the type of camera they're dealing with, 8K... 360 camera. All right, this is a good one. I mean, you want a good business out there, folks? I'm telling you, right? I was thinking about this. So imagine, this is what some of the cameras look like, okay? This is an 8K camera that is recording 360 degrees, right? It's $4,600. It's recording all of it, and you can make VR videos off of it that are in 8K that then you can watch in something like a Meta Quest, etc. What I found myself, right? Imagine. So what you can do is, and then you put on the headset, And you can virtually walk through these areas, okay? So I found myself saying, when you're talking about education, when you're talking about something like that, you can have a history class and you can walk through Rome because it's a 360-degree 8K video. You put on a headset and all of you are sitting in Rome. You're not sitting, you're walking through Rome, okay? So then I said, you can 360-degree 8K video any event, right? And then you can walk through that event in virtual reality in the future. So you talk about a wedding, right? I'm telling you, you want to get after it, man, get after it. This is the idea. Shoot me an email, okay? When you get it going, wedding recordings, right? Think about it. You record a family reunion event. You have a 360-degree 8K video camera going. You record the whole event, and then you provide that to the people. And meanwhile, they have the ability to walk through that event in virtual reality at some point in the future. Now, you start from a focal point, so it has its limitations. But think about that. You literally put on a headset and walk through a room, an activity, a physical place at a physical time. And, for that type of activity, and these, some of the others that just pop up there, there's many that are there. They don't all cost $4,600, but that's a high-end professional one to a big degree. And that's where they're coming, man. I'll tell you that I have it myself, and there's limited quantity of great content. You go on YouTube, there's some cool videos. You can check out like Everest, stuff like that. They have different areas. But yeah. I think that's going to change the way people view things when you start having that type of interaction. Meta, you talk about it, man. Up by another 2.7% today. I mean, look at this. You were just trading at 632. You're up $50 from where you were trading at on Friday. Meta and Microsoft, man, these two. Microsoft up another 0.25%. Take a look at Microsoft. What are we talking about now? Very close to $3.5 trillion right now. We jump over to NVIDIA. Yeah, we're going to need a little bit more volume. Only 142 million shares. We're coming into this high of May 29th when you traded lower with 370 million shares. Let's check back on yields in dollar. Yeah, look at that bar, man. Almost in engulfing, not quite. But you're taking out this last little consolidation, making a run for the highs of 111.22 back here May 7th and 112.16. All right, we jump over to Wells Fargo. Yeah, look at this give back on Wells Fargo, man. Whew. What do they say, folks? Buy the rumor, sell the news. Okay? If you didn't already know that Wells Fargo was doing so well that their asset cap might be getting released, well, guess what? The market did. And they traded it up, and yeah, you sell the news, and you just traded down from what, 78 and change? We're trading at 75, 70. I got talked about. The more interesting part of that is looking at the competition and who they're coming for in terms of some of the more regional banks out there. All right, we jump around to some of the other tech stocks. Oracle a little bit lower today, down about 0.8% right now. Jump over to AMD. Yeah, this equity strong, up 1.1% right now for AMD. Check out some other retailers. Walmart, slightly in the red. Kohl's, it's a tough one, man. Forgive me. And this is probably a story potentially on Dollar Tree. Yeah, Kohl's down 3%. They got some problems anyway. Yeah, no real news up there. Kohl's down about 3%. We jump over to TJX. Positive by 0.2% right now. Look at the volatility. Look at this trading range in Mickey D's. You're trading Mickey D's, man. Buy it at 310, sell it at 314. Set a stop. Look at this range we got in the last couple of days. Look at that identical action. Look at that. What do they say? History repeats, right, folks? How about those charts? You Gotta love that, right? Tell me technicals don't matter and pull up a chart of that McDonald's chart on a 15-minute basis in the last 2 days. All right, folks, one more segment. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets coming in trying to test the lows of the session. Right now, you're flat on the futures, trading at 59.20. NASDAQ 100 gives up slightly. You're negative by 50 points. S&P's trading at 59.81, and pretty remarkable. You got as close as you can almost get. 59.99 was the high at 2 p.m. The high at the open, 59.98.75. Right? Sometimes technical areas, folks, okay? Hindsight's always 20/20. But there's so often where patience is the key. I was having a great conversation with Teddy Kegstad this morning. That archive's available on the YouTube page. All of the videos we do, folks. You can go check those out, the interviews, etc. And he was just saying, you know, we have a little bit of consolidation, in his opinion, until we get to the Fed 2 weeks from today. Now, expectation is going to ratchet up on the Fed. We'll see how Friday the jobs number plays out. But you don't have to give yourself a lot of room sometimes. Patience sometimes is everything. And I find myself, you look, you know, maybe you get into a trade a little early. say to yourself, I could have waited a little bit more. You're always worried you're going to miss out. FOMO, right? Fear of missing out. That's the reason why patience is so difficult sometimes. But man, if you wait for the right price points, the other side of that is you don't got to give yourself a lot of room sometimes. 5 points in the futures, 10 depending on what you're going for. You really don't got to give yourself a lot of room sometimes, especially if you're trading intraday. This chart's a great example of it, right? What do you got for a high on the open? 59.9875. Well, there's your short. You give yourself 5 points. How long did you need? Yeah, you needed 0.25 points. That's all you did is get above there. And then what did you do? You trade 20 points lower. Now, on the flip side of that, you're trading lower. You better believe this might be a spot intraday to get out, man. This is where you bounced at 8:30. It's where you bounced at noon. It's where we're coming into in the close right now with 3.5 minutes left to go in trading. Sometimes it's not that difficult, folks. Okay, technical analysis, it doesn't have to be that difficult sometimes. Areas of price, areas of resistance, areas of support. You call them ice, you call them whatever you want. They're there. All right, folks. Thanks so much for spending the final hour of the trading day with me. I'm coming back for the 4 o'clock update, and then I'll see you tomorrow morning for the morning market kickoff. Have a great Wednesday, everybody. We'll see you at 9 a.m. Thank you.
Building wealth trading in the stock